Hey guys, welcome to the channel. I'm gonna tell you a story. So yesterday I was talking with one of my friends who is trading cryptocurrencies, and he fucked up and he lost all his portfolio. And what makes it worse, he lent that money with a very high interest and he lost it all. Okay, so first talking about the story. So the friend of mine took a loan with high interest, the kind of payments what he is not able to pay back monthly basis. He is employee, and the result is right now this, that he is taking antidepressants because he has really bad situation. He has panic attacks. He has totally lost any kind of motivation, and he don't believe that he can earn this money back. So the amount is actually like $10,000. So it's not huge in trading, but I understand if you're an employee and you're earning this within a year, this is a big money in this scenario. Now the good thing is that you can start trading again and make it better, and then you are going to come out of that. And this is kind of the experience what I had also for myself in the beginning. So 2013, when I got started with cryptocurrency and I bought my first Bitcoin, I also bought it with a loan, and I did leverage trade and I lost everything. So that was the best lesson actually what I got, because of that mistake I have made so much better decisions and so much more money out of the cryptocurrency trading, and that's why I'm here also today. You cannot get greedy in this market. So the cryptocurrency market is volatile. You already know that. That's why you're here. That's why you're trading cryptocurrencies, because you see that prices can go 30%, 40% in one day up. And of course there is a beauty for this, but there is also a risk. So what I advise for you is, when you're using leverage, then don't over leverage. This is also something what I have done many times. The rule what I have broken, and every single time it results me of losing the whole account. And the first times actually I remember really well is when I did the quest or like a challenge of making $100 into $100,000. The first time when I started doing it, and I'm a rookie trader at that time, I started with $100 and I get up to $40,000 almost. And you know what happened then? I made a mistake. And because I was trading with a very high leverage, then of course I lost all the 40,000. And it has happened also after that multiple times. But every time when it has happened because of having too high leverage. So the rule, what you can put in place is now this, that use the leverage based on your account size, where your liquidation price is going to be below 50% drop. So if you're trading, let's say you're going into Bitcoin today, and today the price is I think 57,000, 58,000. So if it is 57,000 is the current price, then whatever leverage you're gonna use, let's say you're gonna go with a 10x, then your order size needs to be so small that the liquidation price is going to be in when Bitcoin is reaching like 20, 29, 28,000. So which is 50% less from current price. And in this scenario, you're gonna trade almost risk-free, because it's very unlikely that it's going to happen. And if it is going to happen, it would take weeks to reach that price. So you can actually react and go out of this anytime. If you are doing the trades with altcoins, so altcoins are more volatile, and as you have seen maybe in past couple of days, then Pepe, for example, was going from $1.4. I think it was $1.4 before, trading constantly, and then it was 0.7. So 50% drop in altcoins is very realistic to happen. And if you are starting to trade a little bit more, then you will see that these kind of drops where cryptocurrencies are dropping 20% or 30%, it happens 2 times or 3 times per month, even when the market is bullish. I understand that everybody is thinking that now Bitcoin is halving, then all the prices are gonna skyrocket. It has never happened like this. There has always been a delay period after the halving when the Bitcoin prices are also going to drop. And when Bitcoin price is dropping, then all of the other cryptocurrency prices are also dropping. And there is your opportunity in there. So we're gonna come now to the second thing, how to make a lower risk trades. So of course, the number one was to reduce your leverage and to make sure that your liquidation price is low enough. When the market drops, now this is the opportunity number 2. When you enter the trade, this is going to define what is the profit what you're going to make. So what I have found for my strategies is the best time to buy is the moment when market drops. So you are fighting against the market. Everybody is going to sell when they see that the prices are dropping. Then there is also coming news out what is even more amplifying the drop. So people are getting scared. You need to be now smart. The moment when everybody is scared and everybody is dumping, then is the time when you are going to buy. So when the market drops 10%, for me, for example, my phone is starting to give me the notifications from every exchange where I have the application is saying Bitcoin is 10% down, Ethereum is under 3,000, and starting to get notifications. This is the moment when I'm opening my laptop again. I'm starting to look the charts like, okay, where I can enter and if the market is going to drop more. And usually when that happens, that a lot of currencies are dropping, 5, 6, 7, 10%, is going to drop more, especially the altcoins. So you are entering with a small position. The moment when the notifications are starting to come, then you're not going to miss it out. So you go with a small position. And now this you take as an indicator. So for example, let's say Bitcoin normal price is has been, for example, last month, let's say between 60 and 70,000. 60 and 70,000 already is like, it's a huge volatility. But let's say if it's 60,000, 65,000 normally every day, and now today you start getting notifications, Bitcoin price is under 57,000, 56,000, then it's time to buy and put your orders in. And you are going in with the assumption that the market is going to drop another 20 to 30%. If you are able to understand that the market can drop even more, then you put in your first buy order in here. When the market drops more, you put another buy order in here, 5% or 10% less, smaller in price. And then it's like another buy order in here, another buy order in here, another buy order in here, right? And what deeper the market goes, the more better trades you're gonna get in. And of course, you cannot over leverage in here, right? So you need to make sure that the price could drop 50%, in total, right? So in that case, you are kind of in a safe side. Unless you are trading meme coins, then it can drop more than 50% in 1 day, 2 days. And then of course you are in a risk and you need to keep your orders even lower. But if you're doing that, now what happens is wherever the price is going to hit, if it was in the first level and you get the small small order, and you get along with the trade. Now when the price is rising, you're gonna make a good profit. Price is gonna go normalize, is gonna go back to normal place. You're gonna earn your 10% plus the leverage, whatever leverage you're using, 3x, 5x, whatever. Then it's gonna be either 5x from the trade or 3x from the trade, but you're gonna earn as a profit when the price is normalizing. When you're reaching the second level, let's say the second level is another 5% lower, then this trade, while this trade is bringing you 10% to normalize, right? This trade is already bringing you 15% profit plus the leverage, right? Another moment is under here is another 5% lower, right? And when the worst happens and actually the prices are dropping really 30%, 40%, then the moment when it starts normalizing, you are gonna make a lot of money. And this is the only trade maybe what you need in a month actually to be way more profitable than you are today, right? So this is very simple strategy what you can use and what I'm using, and this is the way how I'm making actually the most profit always over the years. It has happened like this. So first trade is like an indicator with a smaller size, and the rest ones are just going in a different level. You can put like 3 trades, for example, and share your account like this, that the liquidation would not come within 50% at least. And now then, of course, this is still risky because the prices of the meme coins and a lot of altcoins, smaller ones, can drop also 50% or more. But if you are trading Ethereum or you're trading Bitcoin, Ripple, it's very unlikely. It's like the possibility is there and the risk is still there, but it's very unlikely that it's going to happen in short period of time. And it can happen, but definitely it's not going to happen in one day, right? Something like there needs to be a nuclear war for that or something. If you're using, now this is a third thing, if you're using a market order, there is limit order and market order. I guess if you're trading, you already know the difference. Limit is that when I put the order price into the order book, or market is when I'm gonna buy right away instantly because I want to get along with the trade. Now, if you're using the market order, then you're gambling. This is just a reality. When you're using market order, then you're gambling. So stop doing that. When you're gambling, you're going to lose. House always wins. Money always goes for the smart people. So put your orders in with a limit order. Is no problem when you don't catch the trade sometimes. The next one is going to come. Whatever goes up, and especially when it goes very fast, it's also going to come down. It always happens in cryptocurrency market at least. So there is not going to be a possibility that, hey, something is starting to pump and now you're not going to get along with the trade. So it is extremely rare when it's going to happen, and it's one out of 10,000 probably possibility that you're gonna lose something, or you cannot say that you're losing something if you're not going along with the trade. But if you go with a market order in, it's probably going to be based on your emotion, and emotions and trading does not go together. So then you can be pretty sure that you're gonna lose if you're trading with market orders. It doesn't matter how much you think that you're in a rush, don't do it. Trade only one pair or 2 pairs. So why is this important? So this is a game changer, or was a game changer for me, because I was trying to get along with different cryptocurrencies and make more money like that. And obviously I failed. Now, what I did after that is that I learned the price movement of a one pair. I started with a BNB, and I started looking the BNB, Binance coin. I started looking it every day, every couple of hours, until I understood what is a normal price movement and when it is overbought or oversold. So when it is overbought, obviously, when it's very abnormal, then I don't buy it. I'm not gonna go into the trade. I'm gonna wait it out. I'm gonna put my orders in a lower level where I'm thinking is normal, or I'm waiting for the drop and then I'm making a decision. Right? When the prices are now dropping, I know exactly when it is oversold and when I have a possibility to make a very big profit, because I don't need to wait for somebody to tell me that, hey, Bitcoin or BNB is down 10% or something like that. And now is a possibility. I know all the ins and outs of the coin what I trade, and I don't trade nothing else what I don't know about. And until today, I only trade 2 to 3 coins at the same time. Right? I almost never have more than 3 coins or tokens in the trade, right? Because I want to know everything about the asset what I'm gonna buy. And this is also something what you should do. You learn this, you learn all the news, you know when the news are coming out, you know when the price drops are happening, you know where the utility comes from, what is moving it, what is gonna reduce the utility, and so on, and you're gonna be really freaking good. So the last thing what I wanted to talk about is the human emotions. And as I have mentioned also before, the emotions and trading does not belong together. When you start making emotional decisions, you are starting to lose, right? Every person is exactly like you. They have a fear of loss, so they want to go quickly on the trade, and they go on the trade the moment when the prices are high and the charts are green. Then everybody wants to go along. But this is exactly when you are going to lose. If the chart is already very green, there is no point of anymore going in. Then you need to wait until it's going to drop, and then you're going to get in. So you need to be there before others, before the news, before everything. And don't use too much leverage. It does not matter if you are, you have the possibility, of course, with a high leverage to make your $100 into $1,000. But way more likely you are going to lose that money. It would be better for you when you use small leverage, and if you have $100 account, if you already trade with $10, $15, and you learn to trade, it's going to be more beneficial for you to make more trades, and you understand a little bit more how this works, and you are going to make the money anyway. So don't get greedy and don't get emotional. That's it for today. Thanks for watching. Watch also my other videos. I'm going to keep posting. I know that it has been a while until I uploaded the last video, and the videos, actually there is like a bunch of videos what is made, but I did not upload it yet. And I did also a course for the beginners on trading, that how the people who don't know nothing about trading can get started and create extra income source for life for themselves. And this course is going to be out probably within 3-4 days, because I'm right now traveling and I don't know when I'm able to finish the webpage. So videos and everything is ready, everything is uploaded, but there are some things what is missing. And if you want to learn to trade, also go and check out the channel. Thanks for being in here. See you.